So I stand in support of this bill. It is encouraging that the government continues to support companies through tax reliefs. However, I would like to seek some clarifications and offer some suggestions. First, Clause 2 of the bill amends Section 3 of the Act by inserting a new definition of intellectual property income. This is defined as, quote, any intellectual property income prescribed by the Minister under Section 102, end of quote. Section 102 of the Act, amongst other things, empower the Minister to make regulations that may be necessary or expedient for purposes of carrying out provisions of the Act. Can the Minister clarify why the meaning of intellectual property income is not specifically defined within the bill? What are the assessment criteria that will be considered by the Minister in prescribing a particular income as intellectual property income? Will this be based on quantitative or qualitative data? The reason I'm asking is because greater transparency and less ambiguity in the legislation itself will only enable pioneer service companies and development and expansion companies to better understand what constitutes intellectual property income and correspondingly whether their activities will fall under the tax incentive scheme. I understand that EDB does publish guidelines from time to time on its website, such as guidelines related to the Pioneer Certificate Incentive, PC, and Development and Expansion Incentive, DEI. However, if the principle behind the Act and this bill is to encourage companies to grow capabilities, develop high-value and substantive economic activities through tax relief, then it is crucial for companies to have a clear understanding what the parameters are for them to qualify for tax reliefs. A clear understanding will allow companies to better plan their business and growth strategies. I raised a related point in 2016 during the previous iteration of the Economic Expansion Incentive released from Income Tax Amendment Bill on the need to have clearer qualifying criteria for PC and DEI. Then Minister Lim replied that it is a balance between clarity, transparency, and ensuring we remain flexible and responsive to the increasing complex economic environment. I understand Minister's point, but I have two follow-up queries. One, I think responsiveness can be achieved through the mechanism of legislative amendments, which allows the government to continually review the incentive and schemes to maintain its relevance. This possibly explains why we are legislating amendments to the Act via this bill within a relatively short period of time from the last amendment in March 2016. Two, flexibility may also be achieved through the actual operative provisions in the Act, instead of relying on broad definitions of a key term. To my mind, it is a tenuous argument to rely on flexibility to justify why the definition of an important term, such as intellectual property income, should be left to the Minister to prescribe. Hence, will the Minister consider including a specific clear definition of intellectual property income within the bill? Second, can Minister clarify how the amendments relating to the exclusion of IP income, as stated in Clause 5 of the bill, fit into the new IP regime administered by EDB, named the IP Development Incentive, or IDI, announced during the 2017 Singapore budget? I know that IRAS published a table stating the IDI incorporates the OECD base erosion and profit shifting reports, compliant modified nexus approach, and it's meant to encourage the exploitation of IP arising from research and development activities. Can the Minister clarify how the IDI works in practice with the legislative amendments in this bill? On the point of the BEPS, I understand from a Facebook feedback by Mr. Greg Fong that as a result of the BEPS framework, tax authorities globally have put in more stringent rules to ensure taxpayers pay their fair share of taxes. Therefore, it is unwise to assume that tax incentive will remain attractive for MNCs in this post-BEPS era. And now, more so than ever, tax incentives need to make business sense for MNCs and economic sense for Singapore. In this context, the query raised by Mr. Fong are how do these bill amendments and the existing broader tax incentive scheme fit in with Singapore's broader strategic goals? Mr. Fong pointed out that historically, the initial intention of tax incentive was to attract top MNCs to invest in Singapore, and this worked very well. The tax incentives were then gradually tweaked as Singapore economies grew. Can the Minister explain how the current amendments adjust the tax incentive such as they remain relevant and are aligned with Singapore's current strategic goals? And can the Minister clarify what these amendments will mean for companies who did invest and are continuing investing in Singapore? Also, do the existing tax incentive schemes and these amendments ensure fair employment opportunities for Singaporeans in managerial positions? Can Minister provide data over the past 3 years on the relationship between the number of foreign MNCs with a regional office in Singapore who are enjoying such tax incentives and the percentage of Singaporeans in managerial positions in these MNCs? Mr. Fong clarified that this query is not coming from a place of anti-foreigner sentiments, but is taking a practical approach, as logically, MNCs will enjoy significant cost savings from such tax incentive schemes and general manpower cost savings if they are able to upskill Singaporeans over a period of time and transfer these skills from expatriate foreigners to Singapore. Third, on a broader practical level, how do these legislative amendments and various schemes and incentives from government agencies such as EDB and SPRING all work together from the perspective of an SME who wishes to take advantage of these available tools? From Minister's reply in 2016, I understand that the current PC incentive scheme between 2011 and 2015, only 2 out of the 71 PCs were awarded to SMEs, of which only 1 was a local SME. The explanation then was that PC application requires companies to commit to economic contributions of substantive scale. Hence, it is natural that bigger companies qualify. Keeping in mind that the principle behind this bill and the Act is to put in place tax incentive to encourage innovation, I wish to ask whether there are ways in which our SMEs can benefit from these amendments. Smaller companies are able to respond and react to market conditions and remain agile and flexible. Thus, it appears that SMEs, by their very nature, are better placed to embrace innovation and position their businesses to adapt to changes rapidly in line with the principles of this Act. If we are structuring the tax incentives to largely allow for bigger companies to meet the criteria, can Minister clarify how this is in line with the principles of the Act? So, notwithstanding the above clarifications and suggestions for the Minister's consideration, I support the bill.